Hello and welcome to Crux Investor. We spoke earlier today to Mark Selby. He's the CEO of Canada Nickel Corp. They're a nickel explorer with assets in Sudbury. And if you want to hear our thoughts and opinions on that conversation and indeed the company itself, you can find that at cruxinvestor.com/club, where you can also find detailed company reports, market commentary from experts from around the world on a variety of commodities. There are also training videos on there. We have summaries of other interviews that we have done, and there's a thriving community of investors sharing their thoughts and ideas with each other. And if you go and sign up for the waitlist now, you qualify for a 7-day free trial. And of course, we'd love your feedback too. So do give us a like, leave your comments below. And if you want to see what we talked about, you can take a look in the description. Mark Selby, how are you doing, sir?
Excellent.
Yes, well, I bet. Yesterday's press release and this morning's, wow. So what's happening?
Yeah, no, I mean, that's the thing. I mean, great deposits are the ones that sort of, keep giving. So, to be able to put a resource update out yesterday where we added 1 million tons of nickel, the overall resource over to 3 million tons. And most importantly, double the size of that higher grade core that we've been talking about. So 200 million tons at 0.34%, basically from end to end, and very improved the grade and thickness of it. And then this morning, we had this theory around what geophysics technique gave us the best indicator of the mineralization. And so we finally got a chance to drill it this fall. And so we've now made a third discovery from at Crawfords. This is about 1 kilometer to the west of where the main zone is, where we just finished drilling. And so far with the first 3 holes, we've delineated an area that's 800 meters wide by 400 meters long out of a structure that can go 2.5 kilometers long. It's actually, this geophysical anomaly that we're drilling is even bigger than our main zone. We don't have many assays back yet. We hit some look like higher grade mineralization, and we came back and was very happy with that the last 15 meters of this hole were, over 0.3% with some sulfur in there. And again, it's that north of 0.3 with some sulfur that, starts to get very exciting. So, that's why we put the release out today. And again, we're in this great position where we've got, more than enough exploration targets to go after.
Well, yeah, it comes on to the point here. So because we get people, checking in with us and saying, okay, so 0.3 grade doesn't sound like a lot. So there's loads of companies out there with over, 1%, 2%. They're way more interesting, aren't they?
Yeah, no, I mean, that's the part that is, not surprising. I hear that quite a bit. But the fundamental thing is you want to mine to make money and make cash flow. And so, the great thing about these large scale, low grade deposits is, again, and you can look at benchmarks in the copper industry, and we'll have our PEA out by year end here, is you generally can mine these deposits for between $7 and $10 a ton, and they contain anywhere from 20 to 25. And again, the importance of this higher grade core is if you get some $30 a ton rock in there, then you're looking at close to, 65 to 75% operating margins. And again, unlike a small high grade deposit where you generally have to continually try to keep finding them, we already have a couple million tons of resource. So, any cash the business generates, it ends up as free cash flow, which is the actual cash flow that most investors should really focus on. So that's why these low grade deposits are so good. Now, they come with a bigger upfront capital cost, but once you built them, they're multi-decade cash flow machines. And again, that's why BHP, Rio Tinto, Anglo American in the early 2000s went around and hoovered up all of the best iron ore, met coal, and copper deposits in the world, for that very reason.
Okay, so you're saying scale is important, slightly higher capex, but you've got multi-cycle asset in place. That's what we should be buying into.
Yeah, that's exactly it. Yeah. So if you make the investment, you've got multiple cycles to get it right, and then you have expansion potential beyond the initial investment.
Right, but the numbers that you put out yesterday and today, the numbers are huge. When are you stopping with the drilling, and when are you getting on with scoping studies and moving this thing forward, so we get a sense of when things start to happen?
Yeah, so that's the key thing is from that first resource, at the end of February, we knew we already had enough to be able to get going on the PEA. So that's why we got going on it at that point. That will be out by the end of the year. We're going to continue to step out, but again, a big focus of this drilling program, which we achieved, was to better defining and upgrading that higher grade core. So doubling it in size to 200 million tons at 0.34%. That's 680,000 tons of nickel just in that part of it. Is bigger than most sulfide, deposits and discoveries that are out there. And by the way, it's surrounded with another 2.5 million tons of lower grade nickel, that could be mined at some point in time.
So give me this timing, because it's really important for me to understand, because these things tend to, overrun and they go on and on. But you're talking about PEA end of the year. When does this thing get into production? Does it get into production?
Yeah, no, that's the key, is that, we're going to aggressively advance this. So PEA by year end, feasibility study by the end of 2021. We'll get permits in place, at some point shortly thereafter. And the goal here is to have this mine be in a position to be in production by the mid 2020s. And so, again, what Elon Musk needs is more nickel, and again, more clean nickel. And so, and the second half of this decade is when they're going to really, really need it. So, those projects that are able to meet that kind of timeline, and we're on that timeline now, we've been delivering on it, we think, are going to be a tremendous investment opportunity. There's lots of discoveries and lots of, initial resources and so forth, but, there's very few projects that can actually get to that threshold, that have the scale to get to that threshold, to be able to become a real mine.
But we hear that a lot, okay? And we were talking to a couple of CEOs this week who talk about they've built mines, they've got into production. They say very few do that. It's a game of playing the market. So how does something like yours, at the scale you've got, get financed, and who finances it?
Yeah, no, I mean, that's the part is, 2 months after we formed the company back in November and had started, drilling, I was already approached by several large mining companies, because we had the track record of doing that at Dumont, where we took it from a resource, right through to a fully permitted construction ready project. Again, that in itself is takes a lot of work, and very few projects actually get that far, particularly a large scale base metal operation. So, the fact that I had a new venture with something that had some potential, people were already paying attention, and again, the nice thing with this resource today, again, it just sort of highlights the fact that, again, we took it from over 2 million tons to over 3 million tons. We still have less than half of Crawford explored, and we still have 5 other targets to go after. So, and they know that we'll have the team to be able to take what we have and get it through to, that permitted construction ready project. And, again, be in a position to get it financed. Okay.
But tell me who they is. Whose money is coming into this? What sort of scale are we talking about?
Oh, yeah. No, I mean, in terms of the scale here, you're looking at, 2 paths. One is you're going to have a large mining company, the BHP Rio Tintos of the world, who want, large multi-decade assets. You're talking to the Japanese, Korean, offtake companies and their battery partners and trading houses and so forth, that again help provide financing packages, for smaller companies to be able to advance their projects. And then, again, given what's happening in the EV space, it's various players that are in the EV chain who are keen to secure nickel units. And again, I think everybody should take away from Tesla Battery Day, that they believe there isn't enough nickel to do everything they need to do. So, they'll be out there. I'm pretty sure you'll start to see them being much more aggressive in this space in the next 1 to 2 years.
Okay, end of the year, not too many weeks away now. You're going to definitely deliver a PEA by the end of this year, calendar year, yes, December.
10 weeks from now.
Got it. Okay. Stay in touch. I want to see that. Any more news between then, or are we just focused on the PEA?
Yeah, no, we'll see, again, in terms of the key, one of the key questions for these deposits is in terms of the metallurgy work. So how much of the nickel can we actually recover? So, we're doing that for the PEA. So that should be out by the end of November, as that's a key input into that program. And then we're going to continue to have, again, we're not blowing our brains out in exploration. We're very focused on actually, getting the project advanced as opposed to just making it bigger. But we are going to be doing some step out drilling. So you'll see a bunch of, following up on this third discovery, plus the PGM zone that we had discovered. And then we'll be looking to step out to the 5 other targets, and we'll get started on that in December. So it's going to be a pretty jam-packed couple months.
Okay, looking forward to it, Mark. Stay in touch. Let us know how you get on.
All right. Thanks, Matthew.